I started, you go from sales making, my first year, like 37 grand a year to I think 110 to 250. And then each year from there to was 400, 500, $600,000 plus. And what happens that window of time, right, is that my life suddenly changed a lot.
Wall Street wants you guessing. We want you cash flowing. Welcome to the Mechanics of Money with Sam Silverman. Whether you're a family office, an accredited investor, or a sophisticated earner, we cut through the hype and get straight to what actually builds wealth. Let's dive in.
All right, we are back with Mechanics of Money, and this will be a solo episode, and this is going to be a two-part series. So one, I wanted to focus in this one about the process and journey that I took to go, one, build my career in corporate, but two, what that process was actually like leaving corporate. In the next video, I want to cover from the corporate, time I left to now, what was that journey like? So first, let's start from the corporate world, right? I went to college, right? Studied business, and in turn, got into sales really early. I had no clue what it was that I wanted to go do. And my thought process was, in that time, let's go figure out how to go build some level of tangible skills that I can go use in whatever field I go into and figure out how to go make as much money as humanly possible in that window of time. Right, it's my first job. I was one of like 7, 8 SDRs, right? Think inside sales, cold calling, leveraging LinkedIn, all those tools, right? And I was in a 30-person startup. And I got lucky in that startup that my boss at the time was someone who was a very sales-driven CEO, right? In the tech world, you have two sides, right? One is product-driven and one is sales-driven. And I got really lucky that mine was in the sales-driven side. So spend a ton of time with him, learning, bothering him for information, and all those things. That company eventually shut down, transitioned to a bigger firm where I was one of, say, 50 people in that role. And that was where you start seeing more separation, right? In that function, again, doing the same thing. You're cold calling, you're using email, you're using LinkedIn, social, etc. And your sole job there is to earn the time of someone more senior in the company to potentially sell them a product that you're offering, right? Or sell them your service you're offering, whatever it may be. And that's a really valuable skill set that I think helped build a lot of the nation that I have today to go do other things. And in that field, it was me and 50 other people in this role. Was your competition grows a lot bigger when it's a bigger pool of people. And I was able to go really build my career at that place, right? And perform well relative to the rest of the group, right? Being the top 100 people every single month for a year period. And in turn, that first CEO, called me, offered me a job to move back to Tampa at the time and go help starting to go build out the firm that we were at, right? It was a, new team in a bigger public company. And it was a calculated risk, right? Or calculated bet, I'd say, that, first person, first hire in this division, but a bigger company where how I saw it was that, hey, if I deliver, right, there's resources to go grow, right? And with that it's basically on me, right? There's a huge upside. In smaller companies, what you may find is that if you're in a smaller firm and the company has to grow for you to be able to go grow, level up, or have people under you, etc. This company was already a bigger company where if I delivered, I had huge resources, budget, scale to go sort of hiring and filling out the team, right? That I can go, really scale up. And it was dependent on me, right? It was a pure meritocracy type play where if I delivered, there was more dollars, more resources available to go grow this thing. And at the time I started, you go from sales making, my first year, like 37 grand a year to I think 110 to 250. And then each year from there to was 400, 500, $600,000 plus. And what happens that window of time, right, is that my life suddenly changed a lot, right? Like I was most days working 10, 11, 12, 13-hour days in my office where I wasn't like doing a whole lot at the time. So my cost of living, they didn't jump up dramatically from when I first started making 37 grand a year to then making, 12, 15 times that a few years after that. Didn't really change. So at the time I started buying single family houses, built a portfolio of, call it 10 houses at a time, quickly realized that this was a massive lift in terms of opportunity costs, right? Where for me, what I found was that this opportunity cost here to, go buy these houses, find them, go through due diligence, right? Go through the loan process, right? Go deal with the property managers, all those things. That's a huge opportunity cost for me relative to my day job. Whereas day job, I can go earn 2 or 3 times what I could earn, right? If I perform well, than if I didn't perform well. So for me, it made so much sense to go put all of my time and effort into the day job, right? I was, in better standing. I had more freedom. I had more earning potential. And so I realized like, hey, I'm gonna go sell off all these houses, right? Moved all the money into, freed up, a lot of cash, called $1 million at the time, and started investing into deals as a limited partner, right? Into everything across real estate, some private equity deals, some debt deals, right? Private credit deals, all those different types of asset classes, and probably 10 subcategories of real estate at the time too. Whereas purely my own money, right? So I can be very aggressive and frivolous with it versus investor capital. So it really was a great education crash course in that period of time. And, got to the place back in the corporate role. I was there for a couple of years. I was building up this portfolio of investments. And at the time of kind of leaving this next job, I had kind of come to the conclusion like, hey, this is something that I want to go build something out for myself after a period of time. And I was able to be way in the future. And I kind of got into this whole fund manager, co-sponsor type space across a variety of deals we were doing, right? I realized that, hey, there's different roles in each deal, right? It's not a single person sport, right? It's a team thing you're working through. And what I found was that the capital side, the investor relations, marketing side, all things I was very familiar with my day job, and that I can go speak to the audience very well from being the same person myself, was very translatable to being on that, role in the team when looking at doing bigger deals. So as I was transitioning to my kind of last and final stop, again, the same boss I work for again for the third time now, and kind of moving into up to a bigger role, is that, there's all this opportunity to start building out these deals that I was doing from both the LP side, right, the passive side, which I'd done for so long, now to more of this active side too, right? Been doing it for a few years now, have some level of reputation or have some level of knowledge around it, or I'm saying, okay, I can go start partnering on these projects. And the point I want to get to here as well too is that I was at the new job for, call it, 2+ years, building up my whole investor base, building my book of business. And it got to the place too where I was talking to my boss. I'm like, hey, I want to go full-time at some point. And I think this story, you all will appreciate listening to it as well, is that it's a really scary jump to go, walk away from a mid to high 6-figure salary and comp package in a job that really doesn't suck. Like, it was a really good role in a fun company. Like, it was a good place to go be. And you start going through these things in your head of, okay, like, this is now something I have to go do full time. And if you want to go get the upside in doing something, you usually give yourself a much lower floor, right? So for me, it was passing up on the, benefits, the salary, the commission, the stock, the equity, all those things that was, not all guaranteed, but there's a really high floor in what I was doing and a really consistent period of earning. And, going from there, actually kind of my last day in the company, which I didn't think would be my last day, we were going to the headquarters, right? Everyone who reported to the CRO was there, who was my boss. And it's probably 7 or 8 people at the time who were there, all the different, customer facing type roles. And it's funny, right? Like, and I'd always talk, he just knew, like, always pushed me to go think bigger, right? He was someone I definitely credit a lot for both the opportunity in the jobs I've had to help me progress my career. I think more importantly, the mental side of it, of helping you go think bigger. I think that's something that people get stuck on really frequently, is that they think too small, they get content, right? Nothing's wrong with being happy with what you have, but it's also really helpful if you have someone who will go push you in a huge way that you know is possible to go think bigger and differently about what you can go do, and kind of the art of the possible of what was actually out there. And he was that person for me of, like, helping me go think much bigger, helping me want to go achieve bigger goals. And we'd always talk with me kind of breaking off my own at some point. And it got to the place where we had our, annual planning meeting. I think our fiscal year ended end of September. And it was probably end of June, early July, right, give or take. And we started a meeting where everyone's there who flies into the headquarters, and he just stops the meeting right before we really kick things off. Everyone's having coffee, catching up, etc. And he's like, hey, just so you all know, Sam's last day is end of fiscal, September 30th. And that was news to me. And it becomes a lot more real, right? He made it real for me as, kind of think of the kid who is at the edge of the pool who wants to go dive in, and the parent gives him a little, push to go do in there, and the kid learns how to swim, right? Similar concept, where for me, like, I needed that extra push to go do it myself. I had prepped for it, I was ready for it mentally, but just it gives you that extra accelerant of someone pushing you to go do it. And so that was kind of for me where it all really came together when thinking about okay, this is now real. I have to go produce, I have to go do all these things. And um, that's a big turning point for me, right? Of like, you're now fully independent and fully owning your results versus having the crutch of a, really good executive corporate type job. And I think corporate is great for a lot of folks. I think it's actually a really good learning experience for me. I have friends who in this space too, who may have gone the deal route right out of college or right out of high school and, had done great and learned a ton of things. But I think the corporate route for me and it really helped me become far more polished to have more success in this field, be able to go have higher level conversations where I think without that, I don't know if I'd be able to go have that same level of conversation. So that was just a story I wanted to go kind of walk through of like how sometimes you like need that push, right? To go do something you should do. So that was something I'm always grateful for and definitely like a huge wake up moment. And, there's a lot of people I talk to thinking about leaving their job or building something and, got a lot of questions that from people as well in the emails and comments that I wanted to actually dive through in this show as well too. Cool. So let's start ripping through them. So the decision of leaving the corporate world, was there an actual number and runway you need to feel safe enough to leave? And did you hit it before you jumped? So I think there's a few ways, right? One is, what's your burn, right? What do you spend every month to go live, right? You have that number. Second, you have, okay, what do you have in some level of business income, recurring income, passive income that keeps working for you if your job stops, right? Your net number every month is the first number minus check number. So if your life costs $10,000 a month to go live and you've got $2,000 in distribution from something, your net, cost of living is $8,000 between those two things. Then I look at it as, okay, if my cost of living is $8,000 here, right, for example, and I have $200,000 in cash, right, just using numbers for example purposes, then I've got 25 months to go figure my stuff out, right, over 2 years. I call that your runway. So part of how I think about this is, what's that monthly burn, monthly income. This way, having a business building before you make the jump to is so crucial because it buys you that runway time to go do so. So burn, net income, right? Kind of your monthly net burn. Then whenever you're having runway is your, timeline you have to go get stuff done. Additionally, if you have confidence that your earnings every month should keep going up or trend in the right direction, right? That can then give you more longer term horizon to go figure things out. Because when you look at, leaving the corporate world, you have a big trade-off, right? You go from this certainty and security of a job and a paycheck and a biweekly paycheck, a monthly commission and a quarterly bonus and all those things to you are now on no one's schedule but your own to go earn. So different trade-off, and the more runway you have in doing it, the better off you'll likely be in terms of your chance to go succeed. Okay, cool. So when I was at LivePerson, you're managing 120 plus people. The stock was going through the roof at the time. Why does one walk away from that? When I started LivePerson, the stock was like 16 or 18. I think when I left, it was in the low 60s. Now it's a different story, but it's something too that if you look at it as like, hey, what's your, at least for me, like in corporate, it was such a big piece of it is who you work for. And my boss had left, and like if you're in a corporate setting, right, there's some very cutthroat and hostile scenarios too, where you want someone who's your guy or your girl in that scenario too, who has your back. And I think for me, once he left, like the excitement of being in that place was kind of just tapped out, right? It was, then became a job or became something I really enjoyed being, something I was learning at a lot too. So kind of seeing that is that once I had the opportunity to go follow him somewhere else, like that was a really, really easy decision for me to go follow someone I trust already too. How do you think about replacing W2 income and what was the actual sequence you used to do it? I mean, I think this is a good one too, right? I didn't make a lot of money when I first graduated college, right? And like my lifestyle didn't really increase a ton from, the 6 or so years I was in corporate. So if you can go keep your lifestyle down, all that money you have incrementally, you can go pump in other things, or investments, cash flow, because there's two levers you have, right? One is the income and one is what you actually spend. So if your burn is lower and your monthly investment's higher, right? Getting to that path is much easier where you see it a lot with like these doctors who make great money, right? So making 50K a month as a doctor, but you're spending 50K a month, right? That means the second you stop working, you don't have savings, you're SOL, right? And so my end, I want to have that spread be really big from what I was earning to what I was investing to what I actually needed to go live. And in turn, like that makes that jump way, way, way easier is those who are investing today, that's some content, content before in this too, is that you need a lot of money to go invest if you want to have meaningful cash flow, right? It takes a lot of cash to do so. So on my end, I'm like, okay, if I keep my spend down, that allows me way more time and way less effort to get to that place where I'm past my income and live off of my recurring income or my active income that's truly solopreneur or entrepreneur type earned. This is a good one. So what finally made you realize corporate wasn't the right path for you? So this is a really good one. And the reason I think it is like you go look in a corporate office, right? It's like a very clear hierarchy in a lot of places. You go from rep to manager to senior manager to director to VP to SVP to C-suite, right? And if you take a step back and look around, you see, okay, these people are 2 levels ahead of where I am. And you think to yourself, would I trade places with that person in 5 years in their life, right? And if the answer is absolutely not, it makes your decision very easy in understanding that, hey, I'm capped out here financially, right? Making over $1 million a year in corporate is extremely tough to go do, right? Like 0.0007% of the population does that. And, you're in the highest tax bracket. Your career is owned by someone else where, you can have your CEO have a bad day and fire you for whatever reason because you didn't agree with their pitch or something, right? So how I view it is that it was capped financially. You're trading your time for money, even if it's a lot of money as well. And it's something too, like, that didn't excite me. Some people in their 50s and 60s and like they just didn't look happy. Like they looked like they gave up on their dreams, years ago, and you can tell. And that's just something that I didn't want to go do, right? I realized that like, hey, I'm going to go take that risk and go, sacrifice short term to have the upside long term and go have the control for it as well. Like that control piece too is a really big lever when looking at, what I personally value in terms of freedom, optionality to go build things. So probably my second to last stop, kind of seeing how certain people were, I'm like, this is a scenario I want to go put myself into long term, and otherwise you have to go build stuff for yourself then too. So I'd say a combination of those things. Did you have a plan before you quit, or did you jump and figure it out? I think on this, like I started building so I'd have more runway. Like when I was really first starting, my goal was just make as much cash as I possibly can and then go figure it out later and go keep my lifestyle to a place where it was more manageable. So not really a true plan. Once I got later in my career, I kind of figured out this is what I want to go do and build. And that made it a lot easier to go start building my base of investors, of customers, right? So that way that transition is easier because I wasn't starting from scratch. I think some people make the mistake of not building anything before you leave. So in turn, you're starting from, square one, right? Square zero effectively at the start line before you leave your job. And like in entrepreneurship and building your own business and kind of working for yourself, it's very much a momentum play where the ball is rolling uphill for a very long time, where you're likely, most people, doing way more work than you're getting paid for, by like an hourly rate perspective. So in the future, once you get to the top of that hill and that ball's moving downhill, right, you can like get paid far more than the time you're putting into that work as well, to all the things you've done previously. So like for me, I had the plan of what I wanted to go do and sort of building it before I left, which made that momentum a lot easier to go do and a much quicker process to that momentum type drive as well. This is a good one. How do you deal with the identity shift of not having a title or company behind your name? This is a really good one. I think just in general, as especially men, right? You have a level of attachment to what your title is and what your role is and your socioeconomic status of your job. And, I was a VP, very, very young, ran large teams, very young. And that is part of who you identify as. And when you go take a step back to go build your own thing, like you're giving up your marketing team, you're giving up your operations team, you're giving up all these resources, your company card, these resources that you had from working at a bigger corporate company. It's not yours if you had the access to those resources. And when you go out and build something on your own, you are starting way below in terms of like the hierarchy of, lifestyle and how society views you versus if you're working in a big corporate company. I think for some, like that's a really big thing to get adjusted to. And you have to be willing to go take, 5 steps back than to take 100 steps forward. But some people aren't willing to go do that. And I think for me, like I was very okay with the ego piece of it, of saying, hey, you know what? I'm okay taking these steps back because I'll bet on myself that I can take them way more forward than the amount I took back. So a really important thing to go think about too is if you're going to go leave, like there is at times, especially if you don't know what you're going to go do, a whole identity crisis that comes with it too, right? To go figure out what your day looks like, how your things are structured. So all those things too. And definitely an ego thing is there for a lot of people, and identity thing as well too. So that was definitely a good one. This is a really good one. So how do you think about leaving after building for so long in corporate and getting to a place most people go aspire to get to? And this is a really good one too, right? Like, because if you look at all the societal norms and pressures you have, it's, at least how I grew up, like you go get a good job, you work right up the corporate ladder, and once you're at a certain place, like you coast and you go hang on to that thing for dear life. And you saw that, right? Like my last job was the youngest person in the executive team by, I don't know, 10 years, then probably 15 years after a person left. And that spread of like, okay, like they've worked decades to get to that place and I got there really quickly. You get a lot of pushback of like, you're making a bad choice, you're giving all this up. And it's something you have to be okay with yourself of going against what people think at times. And between, you're like, hey, I'm walking away from a really good job, a really stable job, and to go build your own thing that has no guarantee of success. I think it's something that you have to go be okay with going against these people that are telling you certain things. So the piece of advice that I would have is, never take advice from someone who's not in a position you trade places with. And this can be in different areas too. So for example, you may find someone who has a great family life. And for them, you may take advice from them as it relates to having a family and building something. You may have someone who's done great in business. And if they're giving business advice, then you listen to them there. Or if there's someone who has, great shape, right? Listen on your workout advice too. So what I say is like in that area of life, if they're at a place where you go trade places with them, great person to go take advice from. Assuming that piece of advice in that area hasn't cannibalized other areas of their life too, right? So that's kind of how I think about it, is that who you go to for advice and their point of view, and maybe coming from a good place, if you wouldn't go trade places with that person, I wouldn't hold their advice in overly high regard. This is a good one. What's the financial reality and is it actually better? And the answer is it really depends, right? Like there are certain stretches you go through when you're building things that you make way, 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 way less money, where there have been stretches where I'm like, hey, if I went back and got a job, I could make way more than I'm making today. But you have your freedom, you have building things, right? So in turn, I think what a lot of us go this entrepreneurship route for is one, control, but two, the upside. Like there's very few career paths you can go do that if you leave, they keep paying you, or you have the opportunity to go really build a meaningful exit. So for me, like would I trade it? No shot. Like I want to have the big exit. I want to have the quality lifestyle. I want to have something that I can go build that keeps paying whether I'm working or not. So for me, like trading time for money wasn't an option at all. And I'm okay taking way less money for my time for the time being to go build something in the future that can go pay me way more whether I'm working or not. Well, let's do a few more here. This is a good one. What does your day actually look like now versus a corporate day? So I'd say it's ebbs and flows a ton. Like there are certain days where I have calls for 12 hours straight, and there are certain days where that are total white space. So what I've tried to go do is build in more structure around how it is that I own my day, right? Between, time blocking has been really good for me to go do, because when you're doing your own thing, what you may find is that it's really easy to be busy. It's really hard sometimes to be productive. Certain things that you do to keep your time occupied may not be the right things to go do to actually execute. So I think structure is crucial here when looking at, how to go allocate your time and structure your day. Having time blocks has been very, very helpful for me. So I can go focus on one thing at a given time. I do not multitask well at all. So kind of knowing yourself and knowing how you have to go give yourself structure is really important here too. How do your relationship with money change once you left? So I hold on to way more cash now, or cash adjacent where I have access to it, right? And things like private credit or debt or structured notes. And the reason I do that is that there may be periods of time where I make less income and need to places to go draw cash from to go live, right? That's kind of my opportunity cost money. If I want to go focus on something for a long period of time, I may have to draw cash from somewhere else to allow myself that runway to go do so. So when you're in a corporate role and you're making, $30, $40, $50,000 a month, right? It's very easy to go spend that because the next month that's coming back again. But you don't have that, right? You have to go hold them to cash, at least myself, hold up the cash far more so because that is your lifeline, right? That is your ability to go keep working on things you want to go work on. So in terms of cash, I keep way more in cash adjacent type areas where I can go pull it if I need to. So I'd say less equity growth right now and way more focused on yield and access if I need it than anything else. Were there moments you almost went back and what stopped you? So for me, I waited far longer than others may have with the success I had early on to leave my corporate job. Like I was hanging on so my boss made me leave. And for me, the reason I did that was that I wanted to be so secure when I left that the chance of me going back was so low. I knew one, in terms of being checked out, right? I'd be bitter if I went back, and I just don't think I had it in me to go back and go to the corporate world again. So I waited way longer to have more security to go leave. So that way, that way I felt confident I never had to go back. And the reason is just that I didn't think I had it in me to go back if I had to. So I wanted to go wait as long as possible to go leave versus breaking off early and kind of taking that risk early on. So I waited longer, took less risk, but wanted more surety that I was good when I left. Okay, so what's the difference between how you think about money in corporate versus how you think about money now? And I think about money now as just a tool, right? It's a tool that allows me to have longevity, have runway. It's also a tool I use to go invest very heavily with. And each one of those areas that I use money for is a tool that allows me to go accomplish a certain thing. So I look at it much more so now as this is a tool and a leverage point for me versus income to go buy certain things. So whether it be cash flow, whether it be growth, whether it be tax benefits, whether it be liquidity, right? Whether it be just time to go figure something out, right? I view cash very much so as my primary tool to go build both the life I want, but also allow myself the opportunity to go build the businesses that I want to as well too. Okay, so if you had to build a checklist, the actual pre-departure checklist someone should run through before leaving, what would you put on it? So I think one thing that people don't talk enough about is like the mental piece of being an entrepreneur and building your own thing. So for me, I hedged that in a big way by having the company starting to produce before I left. And I think that's a big mental piece for some people as you go through. If you're just saying, hey, I'm gonna go leave and go figure it out tomorrow, there's a whole identity crisis that comes with that, right? Of like, who are you as a person? Do you weight a lot of your identity and success to your corporate career where you were really good? Are you okay being really bad at something for a period of time to go learn and build it? And then also I think financially too, of like, what runway do you have and what's your fallback in that period of time if it doesn't work out, right? If you have 2 years of cash saved up to go do it, how confident are you that you'll figure something out in 2 years? And if you don't, how confident are you can go back and get a similar job in the future in 2 years? And would you be okay living with that too? So I'd say it's a combination of things. I'd say one, it's the mental piece of it, right? But two, it's the financial piece of it, runway. And three, it's figuring out what that runway looks like and what the other alternative to if it doesn't work out is. And I'll just leave everyone here with this too, is like when you think about your career and what it is that you want to go build, I think right now with everything going on in the world too, especially look at all things AI, right? I'm still very much a rookie at stuff like that too. That's one of the most powerful things you can go have is that having something that you control yourself versus something that someone else controls for you. So if you look at what a job is for a lot of folks too, it's someone else is telling you what you're worth, someone else giving you the opportunity to go work for them, right? So the more control you have over your finances, over your skills and career, right? The more optionality you'll have to go pivot with where the world may be going and give yourself control both over your time, your finances, your resources, right? All those things. So again, thanks for watching The Mechanics of Money here. Solo episode. For those who have not done one of these yet too, it's a great exercise to talk to the camera for a while, right? In terms of kind of working out your thoughts. And we'll be back here next week to go dive into the 3.5 years since I've left my corporate role. It's like figuring out what it is you're going to go do and kind of that whole lifelong mission. So talk to you soon.